You never want one sector or a handful of names to always be the best performers, and they will never be the best performers forever. But what you want to see is eventually some of those ones that maybe have underperformed to start to catch up a little bit. Welcome back to another episode of Off the Wall. Markets are moving fast, and we're here to help you stay one step ahead. I'm Nate Tonslager, and as always, I'm joined by Monument's co-founder and CEO, Dave Armstrong. Dave, how are we?
I am here recording today after the snowstorm that never was here in the Washington, D.C. area. We got about 3 inches of snow and 11 million inches of ice. So I have been getting my exercise in with the snow shovel and the rock salt and digging cars out and just having a lot of fun. But we're not here to talk about the snowstorm that never was. We are here to talk about another Ask Monument Anything mailbag episode, or as we like to call it, Ask Monument Anything. So today we are answering some more smart questions that investors, clients, and other people have been asking us.
Yeah, I think there's endless topics to talk about these days, but I think there's kind of 3 that have floated to the top, especially in the investing world. And as much as we like to talk about just investing, I think it's kind of hard to avoid politics. So actually, when we look at our 3 questions or 3 topics that we're going to talk about today, there is a little bit of a political tilt towards them. So the first topic kind of question we got are, what are the effects if China is going to invade Taiwan? Topic number 2, why is the Trump administration so focused on Greenland? And number 3, what does it mean for investors when they hear the term market rotation? Kind of what is a big key hot word that you're hearing on CNBC, other financial media outlets right now. So Dave, as always, I'll let you pick. Where do you want to start?
Yeah, let's go Greenland, because it really hasn't been talked about for the past week. Other events has sort of hit the forefront of the news. But I want to stress that I appreciate the question. It's always really interesting. I'm not an expert in geopolitical events, things like that. But it's really important to stress that this is really not an investment topic. I'm going to jump into it because I love talking about this stuff. The answer to this should not be driving any sort of investment decision or behavior. And as we always say, don't let politics dictate your investing. If you haven't figured that out over the past 5 years, just trust us. It's never a good decision to let politics dictate whether you're in the market, out of the market, or how you're investing, because they just are not attached at the hip like you would think they would be. But now, a lot of this Greenland can be explained. Now, again, whether you agree with the idea of us having some sort of involvement with Greenland or not, a lot of this can be explained, whether you agree with it or not, with a Thucydides quote, the strong do what they can and the weak suffer what they most. And again, you may not agree with that, you may agree with it, but it really casts the foundation for what I think is happening in Greenland. And for those who are thinking like, oh, geez, I kind of remember that funny guy's name from my 6th grade world history class. He was an Athenian general who fought against the Spartans in the mid 400 BC time. Nate, I know you think that's when I was born, but I wasn't. And he wrote the book that's become very famous, The History of the Peloponnesian War. Anyway, that's a quote of his. This is about the administration's goal of locking down on Western Hemisphere dominance. And again, agree with it or not, this is just my perspective on what's happening. And this gets all tied back to Venezuela, which is tied to South America, which is tied to Cuba. And frankly, it's tied to Canada as well, because the USMCA, or the old, what did it replace? I can't even remember
NAFTA.
Now. NAFTA.
Good old NAFTA's gone.
Exactly. The USMCA is up for formal review this July. And that is going to tie into the oil market as well. So it's got a lot to do with Canada too. And you've been seeing some things in the news about some back and forth with Canada. But specifically Greenland, the administration's view on Greenland is the same as for South America. And that is that China and Russia are trying to establish footholds there for both strategic and resource reasons. So The administration sees the Western Hemisphere as the hemisphere that we need to absolutely dominate in. Those areas are in our hemisphere. That is driving a lot of what I think is his desire to be recapturing the strategic initiative, let's call it, in Venezuela. It was a haven for China and Russia to be in our hemisphere, influencing things that are happening. Same thing with Greenland. So the administration feels that this would or could be a strategic disadvantage if China and Russia were able to start operating in and around the Greenland area, and they're just trying to counter that. It's really no more complicated than that. Yes, there are strategic implications for the Golden Dome, the missile defense that has to happen. You've probably heard about that in the news. But the reality of this whole Western Hemisphere thing, which includes the Greenland, is that the administration, and frankly, I agree with this, we can't allow our adversaries to establish a foothold in our hemisphere to then be able to very closely influence what's happening around the United States of America and our other allies in the Western Hemisphere. Now, to take this back to the Venezuela thing, you got to understand that with the USMCA coming back up for review, Canada exports a lot of that heavy oil to both the United States and to China. Now, Canada is capacity constrained with exporting that heavy oil out to China because it can only go out of one port in Canada. So Canada really relies on America to be buying a lot of that, and then it has to be processed down in the southern states, Louisiana and Texas area. And if the Venezuela oil, which is that same heavy oil, can come back online, it's really going to give the administration a leverage point over Canada, because if we start sourcing that heavy oil from somewhere else, they can't physically export enough and they'll end up with supply. And we know from supply and demand, if there's more supply than there is demand, the price is going to go down. And so I think that the administration is really using a lot of this Western Hemisphere dominance as a way to also influence the review of USMCA. So Greenland kind of falls into that a little bit. Western Hemisphere dominance, establishing a foothold there, keeping our adversaries out, and helping with some military stuff. Now, 2 weeks ago, there was all sorts of consternation about whether we were going to take it by force. I think that's behind us now. But the interesting thing, again, love them or hate them, I get a 50-50 chance there of, talking to somebody that feels one way or the other, just know it, is that this administration starts out with some sort of absurd request for something that gets shot down and says no. And then the rhetoric gets ramped up and everything else. And then as a settling point to bring it all back down, ends up getting what it was that he asked for in the first place. I think the Greenland thing ends up being, we end up leasing land there, putting some bases in there. I mean, we've got a lot of bases around the world. We've got Guam, and there's places that the military has bases all the time. I think that's where it ends up landing on the Greenland thing. So, but that was a lot. Sorry, I just really went off there, but there you go. That's my theory on Greenland.
Well, and that's kind of, I think, a great segue into, yes, it's a political topic. And a lot of the things that are being talked about Greenland are on the politics of it, around the geopolitics of the world. But I think we can't ignore the fact that it did turn into an economic event. And the reason I say that is because tariff threats became the primary negotiating tool. Mm-hmm. And they have been for the administration. So even when political events maybe don't dictate your long-term investment philosophy, it's pretty hard to avoid that there are going to be economic impacts, and especially market impacts, when there are, tariffs being used in this kind of combative way. And I think a good example was last week. I mean, over the long holiday weekend, not this past one, but the one prior, you heard Trump say, anyone who opposes the United States taking over Greenland, or however we get it, or being in control of Greenland, is going to be hit with tariffs. And really that was directed at the EU. considering that Greenland, part of, Denmark, part of the EU by extension, S&P was down 2% the next trading day. So instantly we saw a market reaction of, hey, everything needs to peel back. We are too risky. We need to run for the hills. Well, part of that was not only because of the administration threatening tariffs on EU, but instantly the EU is ready to do retaliatory tariffs. Kind of almost a mutually assured destruction thought mindset there of, well, we're going to raise tariffs here, we're going to raise tariffs there, and everything is going to shut down. And then there were threats of selling U.S. assets by EU investors. And there's still those threats out there. I don't think they're very realistic. But again, all of this decision, all of this pontificating or kind of, talking about it, rhetoric, is causing real market economic implications. And I think it's almost kind of funny that, again, to your point, there's this outlandish request, there's an escalation in rhetoric, but then as it gets peeled back just as quickly, markets recover. And economics recover and maybe rationality kind of sets in. And that's exactly what happened here is a couple days after the initial tariff kind of threats, Trump sat down and his administration sat down with NATO General Secretary, NATO officials. And all of a sudden we have concepts of a deal, which Dave, I think you kind of laid out is military bases. US does have some kind of strategic foothold there that they've had before, will have in the future. And the markets recover. Just like that, to be essentially flat within a couple of days. I think they were down slightly last week overall, maybe like 0.3%. But think about that, from down 2%, the initial recovery. I think that brings back the broader point is politics can't dictate your investment strategy, but politics are going to cause volatility if tariffs remain the primary weapon of kind of the, Trump administration when it comes to negotiating. So I think you can't try and predict how it's all going to happen. There's people out there talking about the taco trade or the, Trump always caves in or whatever it is basically saying whatever he says he's not going to follow through on. Honestly, that's a very dangerous world to live in my opinions. You got to really look at what the data is saying and look when the market trends change significantly, not little hiccups like what we saw last week. Those are going to keep happening given just how prevalent tariffs are right now, kind of in the geopolitical landscape. So again, the broad theme here is this is going to happen. This was nothing like we haven't seen before, but you got to keep a cool head through it to kind of see, what are going to be the long-term implications? Because if you reacted to that 2% sell-off on Monday, you missed out on the recovery, which only happened 2 days later.
Yeah. I mean, another way to look at it too is nothing bad is going to happen if we establish a base and a military presence in Greenland.
And there's a lot of benefits too. I think people keep talking about the other thing there are the mining rights is, if you look at it on a global landscape, rare earth metals, which are vital to producing a lot of the technology, a lot of the military equipment, basically anything you think of that uses a computer chip needs those raw inputs. And there's large deposits there. And again, right now it's not controlled by the EU, who in theory is a friend of the United States. I know tensions kind of are flaring up and things like that, but it's kind of like if your best friend has something really cool, you don't necessarily need to take all of it. You just hope they share some with you in a reasonable way. And I think that's where we're headed here is economically, it actually should give us maybe more leverage against, against other rare earth metal producers because we're going to have access so close to U.S. borders by a friend. So
yeah,
I think that's a great segue because now here we go is the other largest producer of these rare earth metals is China. So China's a big one, and in negotiations, trade negotiations, rare earth metals have been a key sticking point in something the Chinese have used as leverage, withholding the supply if, we don't meet or agree to their demands. So related, but not totally, I think the second question that we got from, a listener was, what are the effects, both probably geopolitically and in the market, if China invades Taiwan? So, Dave, I know, based on your marine experience, which is extensive, I think I would love to kind of hear your initial response to that question.
Yeah, it's super simple. It would be really bad. I mean, It would be like the beginning, a precursor to World War III. It would be very, very ugly. I think we would go into a massive market decline. I just think that it would be a horrible black swan event that would probably be a precursor, if not the actual event that would start World War III. That's how bad it is.
I agree. I mean, I don't have not the same level of military expertise, but I think that would be kind of a red line that would really push a lot of things over. And I think it wouldn't just be a U.S. market sell-off. We're talking about global markets, right? Bond market, all financial markets would be really hit, I think, in a very dramatic way.
Yeah. And we would be pressed into combat, and this country would see military losses unprecedented in the history of our country. We would be losing entire aircraft carriers, battle fleets. I mean, it would be an awful event. I think that because it is such an awful event to think about, the likelihood of it happening is very, very low. I just think that China can't threaten anything if it doesn't have the capability to do it. So it has created and continues to create the capability to do it. And they know that we don't want to get into a shooting war in the Pacific. I don't think it's a very likely event, but if it happens, I think it's going to be catastrophic for the global economy and mankind.
Well, and I think you brought up something that we talk about all the time. We just talked a lot about the possibilities or what's going to happen around it. And sure, it's possible, but you brought up a great point too. It's not probable, because I think kind of both sides, China, US, everyone involved kind of knows how dramatic and drastic the implications would be. So I think it's more kind of a media pundit talking point, a kind of, boogeyman is out there. But everyone does seem to be preparing. I think, like you said, China is taking steps to make sure that they are maybe more ready if a conflict would ever break out. And I think the U.S. is doing the same thing. Specifically, when I look at it, the big thing with Taiwan and why it's such a flashpoint, I think, for the global economy is Taiwan is the largest producer of computer chips in the world. And those computer chips, again, like I was talking about with rare earth metals that go into making the computer chips, well, computer chips go into making everything else. So that supply chain there is really important. So while China's been taking steps to prepare, the U.S. has too. And I think the biggest thing there, again, when we talk about computer chips, is pulling some of that computer chip manufacturing away from Taiwan and into the U.S. And Taiwan Semiconductor Manufacturing, so ticker TSM on the stock market, has reportedly committed to investing $165 billion in facilities here in the United States, in Arizona specifically. And even more so, we talked a lot about how tariffs are being used as a negotiating tactic. Well, President Trump has actually pushed to lower some of the tariffs from Taiwan to make it easier so we can build up these chip supplies. And really what this all shows is we've been talking about onshoring U.S. manufacturing. Well, this is onshoring manufacturing in a very critical area of the world that, again, would help reduce some of the impact globally, economically, should a war break out between China, Taiwan, the rest of the world.
Yeah. And I'll get military wonky for a second, and I promise I won't get lost in the sauce here too much. But as it relates to just the economy and the American economy and investing, this is really detailed, but I try not to get too far into it because I'm not an exact expert in it. But the American people need to understand that our naval presence in the world right now is going to be artificially compromised by the fact that we have a class of ship called a cruiser. And lately in the news, most recently in the news, there was an announcement that the Department of War had decided to cancel the plans to build a new frigate that was based off of a hull design that came out of Italy. And the reason that's such a huge deal is because we do not have a replacement for the current very old and aging cruiser ship class in the United States Navy. Now, why is that important? Because the cruisers have an enormous amount of what's called VLS, or vertical launch systems, which are nothing more than, think about it like a missile silo on the deck of a ship. Okay. So if you're on the news and you see these missiles that come flying up out of a ship and then go off an arc and go somewhere, those are being launched out of a VLS. Our cruiser fleet is so old and decrepit that they can barely get out of port these days, undergoing maintenance cycles of like 5, 6, 7 years before they even get put out to sea. And we have a massive problem with the fact that these ships are going to be retired before replacements come online to fill those the retiring VLS capability. It's a massive gap in our naval response and ability to defend Taiwan if something happens with China. Okay, so it's possible that, so when you hear Trump come out and say, oh, I'm building the Trump class battleship and all that stuff, everybody gets all worried that he's putting his name on it. No, people need to understand that we very, very quickly need to bring VLS capability back online as a naval asset, because right now, mathematically, there's no way we keep up with that. The amount that's going offline is not even close to being replaced by what's coming online. And so this idea of building the golden fleet, as I've heard it referred to, shipbuilding, increasing shipbuilding capability in our country could have a massive positive economic impact.
Yeah, man.
And it's going to be driven by the fact that we just have, I got to be careful how I say this, but like the Navy has just been tripping over itself for 2 decades with shipbuilding. And now we're paying the price for it. So this renewed interest in building shipping could actually being driven by this capability coming offline, could actually be a massive positive impact. And that is all driven by the fact that we literally cannot defend Taiwan as well as we should be able to defend Taiwan with this gap in capability that's coming up as ships retire. So it's a little wonky, I get it. And again, I'm not an expert on it, but that is what's happening. That's why you're seeing the administration really start to ramp up talk about shipbuilding and getting more ships online. And that's a good thing for everybody. It's a good thing for the security of the United States of America. It's a good thing for the security of our allies in the Pacific. And it's a good thing for our economy too.
Yeah, I think it goes to show, while these events are kind of scary to talk about, you should definitely want to plan for them now. And so kind of pivoting back to what can you do for your portfolio, that doesn't mean start selling out of all of your, foreign stocks and start putting everything in gold, or, making a big prediction about what's going to happen, because war, geopolitical events, they're impossible to know when they're going to start or how long they're going to last. I think, Russia, Ukraine is a great example. People thought that war was going to be over in a week. We are here years later still trying to figure out what are the implications. So, and during that whole time, the markets have just continued rallying. So just like the US is kind of preparing for possible events, you need to make sure you have a plan in place today for your portfolio on how you're going to react if something happens. For me, what that means is I'm not going to, take a action today when the data is not saying to. I'm going to let the data unfold, continue to watch it closely. And when those meaningful shifts in the trend happen, I'm not going to hesitate to put all emotions aside and reallocate how the data is saying you should be. Mm-hmm. I think an example, right? If China does invade Taiwan, we get all of this kind of market sell-off, but a sector like technology, which is seen as pretty risk-on, risk-friendly, is still showing strength. I'm going to stay invested in tech until the data says otherwise. And that's, I think, the benefit of having kind of a data-driven process that really removes emotion is a lot of these events, money is always emotional. Geopolitics are always emotional, but you got to stay grounded. And so when we get all these questions, I know we talked a lot about politics in these past two, but the market implications around them are really just about remaining disciplined for the long term. And yes, they're scary. They're not fun to talk about, but you can help make your money easier to deal with by just being data driven.
Yeah. And I'll tell you, you have to remember there's a huge difference between talking about politics and policy, right? And a lot of what we're talking about isn't necessarily politics as much as it is policy.
Sure.
And if you think about all of the policy disruptions and political disruptions and everything else that have taken place over the past 50 years, none of those things, even collectively, have impacted the power of compounding inside the S&P 500. I'll just throw out some quick statistics. Okay, so you go back 50 years, so 1975, right? Okay. If you just go back 10 years and you put 10 grand into the market, compounding, including dividends and everything, total return of the S&P 500, you'd be up close to $40,000 on that. So 4 times your money over the past 10 years. Just think about all the stupid stuff that's been in the news over the past 10 years. But still, you had a 4x return on your S&P 500 total return for 10 years. How about 20 years? That same 10 grand would be worth about $110,000. So a 10x on your money, just over 20 years. I mean, Monument has been in business for 18 years. So if I put 10 grand into the market when we started Monument, I'd be up almost 10x on my investment with all of the stupid, crazy stuff that's happened over the past 20 years, right? Wars, 2008. I mean, all of that stuff. How about 30 years ago? Put 10 grand in the market. Okay. You'd have 300 grand. If you did it 40 years ago, that 10 grand would be worth $1 million. And if you did that 10 grand 50 years ago, about $4 million compounded. So think about all the stupid stuff that's happened over the past 50 years. But hey, the market just keeps doing what it does. And so a lot of this policy debate, political debate, it's really irrelevant to the power of compounding of the S&P 500 and being invested.
All right. Well, I promise this third and final question. There is going to be no policy, no politics involved. This is a pure investment.
Oh, come on. I was on a roll, man.
You really were. Well, that's why I figured, again, we usually like to stick to investments, but there's so much expertise that you can tap into through people. And I know, Dave, with your experiences with the Marines, I think you have such great insights that I felt like we had to. I always like to stay out of politics, but all right. Final and third question. We got this from a listener who sent us an email, and I'm going to kind of rephrase it just to make the question a little more concise, but you might be hearing terms like market rotation, quote unquote, on CNBC, other financial media outlets. But if you're not following those channels closely, you may not be hearing it, but it's definitely a hot current topic in the market. So I think the question I have is, what does market rotation really mean? And why does it matter to investors? And I think kind of if I'll take the initial stab here is, what is a market rotation? So to do a little bit of a jargon breakdown, a market rotation happens when the previous leaders of the market are no longer the leaders, and maybe some of the parts that haven't been doing well start to do better. So think about it. Markets are rotating from one group of winners become the losers become the winners. It's kind of that rotation that you see. And honestly, that's usually a very healthy thing in the markets overall. You never want one sector or a handful of names to always be the best performers, and they will never be the best performers forever. But what you want to see is eventually some of those ones that maybe have underperformed to start to catch up a little bit. And I think kind of looking at it specifically with the market we're in now, we've been talking about these large cap growth, large cap tech, the Magnificent Seven, as they've been kind of coined or given the nickname, have been so strong for so long. Well, they're off to a rough start here in 2026. And I think, when you hear the Magnificent Seven, those 7 companies that have been the top performers for so long, they become so popular that there is now an ETF out there that you can buy to get exposure to just those 7 companies.
That's great. In case you're too lazy to just go out and buy 7 stocks, you can buy an ETF.
Well, and pay someone to do it too. Don't forget, ETFs have the embedded expense ratio. So you're paying someone to just go buy 7 names and basically hold them.
Hey, you can also go out and buy fart coins. So, there's all kinds of things out there. But please make your point. I'm sorry.
I think, and that's kind of what the whole point is they become so popular that people buy this ETF, the Round Hill Magnificent Seven. The ticker is MAGS, MAGS. So I'll just call it MAGS from here on out. 2025, it was up 23%. Yay, good for you. That's awesome. The S&P 500 was up 17. The average stock, so if you look at kind of the average stock by looking at a different index, the equal weighted S&P 500 was up 11%. So Magnificent Seven companies, those 7 names were a reason you were doing so well and the index was doing so well. Well, let's look at 2026. And I know it's a short time period. We're recording this at the end, so it's only end of January. It's only been a month. That MAGS ETF is negative, about 0.5% roughly as of Friday. Average stock, that equal weighted S&P 500 is up 3.7. So what are you seeing? You're seeing a rotation out of those Magnificent Seven names, and the average stock is starting to get more strength. And that's really, I think, again, a healthy thing. Those 7 companies weren't going to be the best performers forever in perpetuity. The concentration risk you've been hearing about in the market, that there's only 7 companies that are pulling the index returns to all these levels. Well, now it's all kind of the other names are starting to perform really well. And what does it really, I think, mean for investors? That's maybe a question we can get in here next, but that's what a market rotation is when you see it, the top performers start to lag some of those worst performers over some time period. 2026, we're starting to see that rotation happen.
Yeah, and I think it's interesting, the RSP, right, the average stock up 3.7. S&P 500 is up around 1.6% year to date. So again, just 1 month, I get it. But still, this is kind of interesting to me. But very quietly, the Russell 2000 index, which is the index that tracks the smaller cap stocks, okay, has just set a record for the number of days that the small cap stocks have outperformed large cap stocks. So Russell 2000 outperforming the S&P 500 14 straight days in a row. Okay. The only other time it's been up even close to that was back in 2016 when there was a 13-day record. Going all the way back to 1979, which is about when the data exists for the Russell 2000. There's exactly 0 other times where there have been double-digit days of the small caps outperforming large cap. So there's another example of sector rotation. And just so happens that the Russell 2000 is up 7.4% year to date versus 1.67% for the S&P. And again, I know it's just a couple days, not a couple days, but it's about a month. I get that. But still, there seems to be a sector rotation taking place between large cap stocks and small cap stocks. I don't really hear it being talked about that much. People should be aware of it. If you're well allocated and you've been having one of those portfolios where you've got a great asset allocation, you've been asking yourself, why am I still in these small cap stocks? Sometimes these sector rotations happen and you can be the beneficiary of having a good asset allocation.
Yeah, or the flip side of the coin is kind of like what we do at Monument when we're looking at trends.
Mm-hmm, exactly.
Recently in our ETF strategy, we moved from a mid-cap exposure down to small caps because we've seen such significant strength. Now, this isn't a recommendation to go buy them all now. Again, our strategy thinks there's strength in them now. It could change at any point in the future, but that's why you got to watch the data. You can't predict when these rotations are going to happen or how they're going to unfold, how long they're going to last. But if you're watching the data, and this is the broken record here at Monument, you can react meaningfully, intentionally, and quickly if you see these kind of trends unfold. So, you never want to be a dog chasing your tail. If you were a Magnificent Seven investor, now all of a sudden you start buying small caps and they start rotating. Like it just turns into this circle. But really what you want to do is set up a process so you know what trends am I looking for? What are the meaningful shifts? And how can I then reallocate my portfolio? Because again, this is pretty healthy that the market is doing this. And I think a lot of people have been complaining that the market is so concentrated that there's only a handful of names that are doing well. Well, now more names are doing better. So when you think about the long-term trend, this is the kind of market action you want to see and have a process to capture and latch onto when stuff like this does happen. Because who knows when the next rotation will happen or where to go. Yeah. Maybe instead of small caps, all of a sudden we start seeing international, which has done very well, do even better. You can never predict them, but you can definitely react to them.
Another interesting thing too is that now we still have 4, let's call it 4.5 trading days left in the month, but this statistic remains true. So now it's possible that we could wipe out 1.67% positive return inside the next 4 days. It's entirely possible. But when the S&P 500 is positive at the end of January, the next 11 months are higher 87% of the time. Okay, so with the S&P 500 currently up 1.67%, if we can hold on to that, there's an 87% chance that the next 11 months are higher. 87%. It's a pretty good statistic there. But I think going back to what you're saying about the data, the other thing is that the thing that drives the stock market more than anything is earnings, right? And right now, the 2027 earnings per share expectation is already up over 2% over the last 2 months, right? So 2027 earnings expectations are already up 2%. Okay. So as long as that 2027 expectation stays above the 2026 expectations, it's a pretty good chance that the next 12 months earnings per share are going to continue to climb. And if that's the case, that is going to be helpful to a market posting a positive return for this calendar year. No guarantees, just saying that's what the data says. could also get that 13% of the time that the stock market isn't positive after positive January. But, still not bad statistics, and it's interesting to know. Okay, if you've made it to the end of this episode, a special thank you for this episode after all the rabbit holes I ran down there. Whatever. Toss me an email and tell me if you think I'm an idiot or if you agree with me or you don't care, whatever. Let me know what you think about anything that Nate and I talked about here. But as a reminder, if you want your question answered on our next AMA segment, all you have to do is submit us an email, offthewall@monumentwm.com. So it's all one thing, offthewall@monumentwm.com. We'll get your question. We'll put it on here. We'll get it answered. And that's part of the fun. And the questions that we answered today were questions that came in off the email. So thank you to everybody who's been submitting questions.
You can also leave us a comment too. LinkedIn, YouTube, anywhere that we're posting these, we're always watching the comment section to see kind of what questions listeners have. So you can always send them there too. Finally, I always like to let people know that, Monument does have a second podcast hosted by Jessica and Emily called Between Sips. They're talking more of the financial planning topics. So whether it's charitable giving, education planning, retirement planning. I think recently there's an episode about kind of estate topics and thoughts. On that one, they're really trying to dive into the purpose behind your wealth. And really, I think when you blend investing, like we talk about here on Off the Wall, with the planning side that's on Between Sips, that's how you really drive a wealth strategy that can give you kind of meaning and really the freedom to hopefully live your life and not worry about the money side. So, make sure you subscribe to both. That way, whenever an episode comes out, it'll be right at the top of your feed. You'll never have to look for them. So, it's easy to find if you're a subscriber to them.
Yeah, and a quick news flash. Pay attention to our YouTube site because we just finished up creating the Monument Podcast Studio. It's very visually appealing. We're really excited about that. So it's great that people listen to the podcast in their car, stuff like that. But definitely pay attention to our YouTube channel because we have a great new video experience coming soon to that. And we're really excited about that. Okay, but with that, I am finally going to sign off and say goodbye. We will see everyone on the next episode of Off the Wall. So thanks again.
The content presented by Monument Capital Management LLC is intended for general informational and educational purposes only. No portion of this content should be construed as the receipt of or a substitute for personalized investment, financial, legal, or tax advice. Monument is neither a law firm nor an accounting firm, and no content should be interpreted as legal or accounting advice. Any discussions of investment strategies, financial planning concepts, or related topics are general in nature and may not be appropriate for every individual or situation. Different types of investments involve varying degrees of risk, and there can be no assurance that any investment strategy, planning approach, or discussion referenced will be profitable, suitable, or successful for any particular person or circumstance. Past performance is not indicative of future results. From time to time, this content may reference hypothetical situations, illustrative examples, or stories that do not involve actual Monument clients. These scenarios are designed solely to illustrate concepts or demonstrate how Monument might approach similar situations and should not be interpreted as endorsements, testimonials, or guarantees of any particular outcome. No two clients, situations, or experiences are exactly alike, and results will vary. Nothing discussed should be interpreted as a guarantee that any client or prospective client will experience a specific level of results or satisfaction if Monument is engaged or continues to be engaged to provide investment advisory services. Monument's investment advisor registration status or any prior experience should not be construed as an assurance of future performance or success. Copies of Monument's current Form ADV Part 2A, Disclosure Brochure, and Form CRS, which discuss our advisory services and fees, are available upon request or at www.monumentwealthmanagement.com/disclosures.